Very nice to see you.
So nice to meet you. Thank you so much for inviting me.
Thank you. Welcome to the... Franklin Templeton is managing $1.4 trillion, which is quite a lot, it seems. And how much amount of asset are you overseeing?
So the Franklin Templeton Fixed Income Group oversees around $130 billion, which is what I am directly involved in.
So you're a busy person, right?
A little bit.
So, after October, we are meeting so many foreign investors like you and the CIO and the CEOs. Is there any reason?
So I think that the real interesting piece about Japan, on the equity side, it is abundantly clear. After a very, very long time, Japanese equity markets, Japanese corporates are benefiting massively from the renewed growth, and definitely the weakness of the yen has benefited Japanese corporations. But we're also seeing the next level, which is wage increases are being passed down the line. These are all positive developments. It's a normalization of the economy. We're seeing inflation. We've probably seen maybe even too much inflation. But I think the main reason we see investors come to Japan is it has become very interesting. We are at the cusp of policy changes.
Really? So we have been seeing 2 or 3 decades of deflation, actually zero interest rate almost, and ultra-accommodative monetary policy, which is quite behind the rest of the world. And now this time it's different.
So I think the fact, if it had been just 1 year, we could have asked, is it different? But you know, it's been 2 years, it will be 3 years, and inflation is now moving into the services sectors. Because we have some wage inflation as well, there is a greater likelihood that this time it actually is different. So we might in fact see Japan return to a more normal economy where you have low and stable inflation, which is healthy.
And also Bank of Japan is about to, or has already changed its monetary policy, shifting to more, with almost finishing or stopping, or how can I say, but they're shifting its monetary policy. Yeah. How do you see these changes, and how does it affect your investment strategy?
So the Bank of Japan has released yield curve control, but having said that, interest rates so the hiking cycle has not yet begun. Now, I think the next step is for the hiking cycle to begin, and Governor Ueda is being very cautious. Having said that, I think over the next quarter or 2 quarters, our expectation would be that we start seeing the interest rate policy move as well. I think it's going to be an important step towards also reversing some of the unusual yen weakness that we're seeing currently, because some weakness, okay, but this is unprecedented to have the yen so weak for so long, and it would be healthier to have it strengthened a bit from there.
Actually, do you think in yen against dollar is close to the bottom?
I think it probably is, in part because I do think interest rate policy is getting ready to move, at which point I would anticipate that the yen would also start to strengthen, because I think Japanese investors have historically sent quite a fair deal of money to the US, for example, to invest in US treasuries. As interest rates in Japan move, we would anticipate seeing some of these flows come back to Japan, and that would contribute to yen strength as well. More globally, I think from our perspective, we are looking at the yen and we're looking for it to strengthen, and that is one way we actually look at the Japanese market right now.
If we see the interest rate hike, or maybe we are seeing the interest rate hike outside the world, there is headwinds for the stock market, and also it could be that tailwinds for the fixed income market. Are you seeing any? Do you believe now is the time to invest in fixed income? We should focus in more. Now is the time. Should we much more focus on the fixed income?
I think so. Because look, it's been over 15 years in the whole world, not just Japan, but in the whole world, that fixed income has not delivered any income because interest rates were so low. Now that has changed. This year so far, if people stayed very short duration, so put their money into money market funds, for example, in the US, you made a healthy return. However, I think again, over the next few months, next quarter, 2 quarters, it starts becoming